Welcome back to the channel. Today's small rule which we are going to discuss is the rule of paragraph 4 number 5 of the Umsatzsteuergesetz, the German VAT Act, and it just makes a list or gives us a list of those transactions of intermediaries which which are tax exempt. You remember that a few videos ago we talked about the rules for taxability of such transactions. So now we follow it up by when are they taxable but free of tax. Here you have a small but comprehensive list of those intermediaries activities which are free of tax. First, transactions relating to exports but not to intercommunity deliveries. So covered by paragraph 4 number 1 letter A, that's nothing else than export of goods. So the transactions relating by brokers relating to these exports are free of tax. Also in 4 number 2 to 4b, these are transactions which are similar to exports. Cross-border transportation of persons by aircraft or ship, transactions which are exclusively performed in certain countries, and deliveries which are deemed to have their place in the inlet according to paragraph 3.8 USDG. These are rules, or this is a rule where the place of a delivery from a good which is imported into the EU is deemed to be in the inland because the deliverer pays the inland importation VAT at the border or a bit later. Then we have an additional remark which clarifies or states not exempted is brokering or agency transactions by travel agents if they are ordered or rendered to the travelers. And at the end, the usual conditions come. The requirements of the exemption must be proven by the entrepreneur who claims the tax exemption. That's just a general principle of law, that whoever invokes a rule which is in his favor has to prove that the rule applies. And so whenever you say, I did a tax-free transaction, the burden of proof is on your side. The only really material remark is the next one in the next sentence. The Federal Ministry of Fiscal Affairs may order by regulation how the entrepreneur has to prove the fulfillment. So it might be that you think you have sufficient proofs. However, in the Umsatzsteuerdurchführungsverordnung, the VAT implementation regulation of the German state, there can be specified details on how you have to prove the tax exemption, and if you don't align with these specified requirements, your proof would be regarded as worthless. So if you have to deal with these things in practice, it is always worth the while to look into these regulations. However, that's far too detailed for our purposes. So let's turn back to the list of tax exempted intermediaries transactions, and here the list is. However, we should try to understand the background. Why is this list as it is? And in order to do that, we are going to think about the situation a bit together. Okay, so in order to understand the list of all these tax-free things which we have seen just now, let us have a look on what is economically the background. So I hope you remember what common sense tells us about the treatment of such services of an intermediary, broker, agent, or what else it is. Because common sense says it should make no difference who gives the order to the intermediary, either the seller or the other contracting party, because if you make a difference, then the reaction of the market will just be that always the order comes from that party which can order tax-free. So there should be a neutrality. And if we keep that in mind, then we should review the tax exemptions which we had on our list just before, because then we can probably understand why the list is as the list is. So, exported goods. Let's imagine what happens if the seller pays for the intermediaries or agents service. Then the situation is as follows. We have a seller, and the seller wants to sell a product for 1,000 euro. Now he doesn't know to whom, so he asks for or looks for an agent or broker to find a customer. Here's the agent. The agent finds a foreign customer. So the foreign customer is here, says hello, wants to buy, and then the agent or broker charges his fee to the seller, let's say 100 plus 19 VAT. Now, if we didn't have a tax exemption, so if everything were regular, then we would have an input tax refund to the seller, because the seller is going to use this broker service for his output. And this output is a tax-free export. However, with an export, the input tax refund is still upheld, so his net cost will be 100, so he can sell in a tax-free way for 1,000 plus the 100, which increases his cost naturally, so for 1,100. So basically, the cost caused by the agent reaches the final customer free of any tax if you design it this way. Now, if the buyer pays for the agent, then the situation would look a bit different. We have the customer wants to buy something, looks for a supplier, doesn't know a supplier, contacts an agent. Agent looks around and, surprise, finds a supplier who can offer the required services for deliveries. Let's say here deliveries. That seller sells to the foreign customer and delivers his goods free of tax because it's a tax-free export. And now the agent or broker charges a fee of 100 as before. And now the question which the legislator had to answer is, should that be plus VAT or without VAT? And naturally, if it had been plus VAT, then in this constellation, the costs for, or the price, no, the costs for the foreign customer would have been higher than on the left side. And so the consequence, the logical consequences treat it alike. So make the charge of the broker free of tax. That explains why we have that entry on the list. Well, what is cross-border shipments or airport transport of persons? That's usually tax-free. We didn't talk about that because it was too much of a remote topic for us. But when we look to agency services in that direction, again, we have the two same constellations. A, the enterprise uses an agent. So we have the enterprise, looks for a customer, doesn't have a customer, looks for an agent. Agent sits around, makes some telephone calls, finds a customer, charges a fee to the enterprise. The enterprise then could get that refunded if it were not tax-free. So the cost would be plain 100 net, and so the aircraft carrier service could charge his or their services to the final customer for net. If customer now uses the agent, we have a slightly different situation. Customer wants to travel also. Looks for an agent, agent finds a supplier, supplier charges cost of 1,000, that's free of tax because we said that's usually free in certain constellations. And now, surprise, the customer would have to pay for the agent because the agent, as we mentioned, was now ordered by the customer. And if that were now 119, there would be a difference between the left and the right side. That would not be right. And so the only thing which is left in this situation to make left and right equal is to declare the charges for the broker tax-free. Naturally in both constellations, because otherwise it would be strange in the text of the law. So these two situations can only be treated equally if one creates a tax exemption for the services of the agent. Naturally, for both constellations to make things clear enough. And the same logic applies to the exemptions for the agency of brokering services relating to deliveries of services which have their place in a third country. Because if the place of supply or place of delivery is in a third country, the whole affair is not taxable at all. And then, so a delivery, whatever takes place here, would be completely free of EU tax. And then also the agent's fees should be free of any tax. And apart from the risk that there could be a tax from that foreign third country. So that also serves to minimize the risk of a double taxation. Yeah. Then there is another last entry on the list, that the services of an agent or broker when relating to deliveries covered by 3.8 USDG also are free of tax. And it's difficult to find out the potential reasons for the legislature's decision there. At least for me, I couldn't find them. So, but what I can do is use my own common sense. 3.8 shifts the place of delivery of a good only to the inland because the deliverer decided to pay the VAT at the border, the importation VAT. So the 3.8 cases are cases where the taxpayers or the parties involved have a certain influence. And so if they decided that not the deliverer pays the importation VAT, then the place of the delivery would be remaining in the third country, and then the agent's fee would automatically be free of any tax due to the previous rule. Now, naturally, that wouldn't make much sense to say sometimes the agent's fee is free of tax, sometimes not, just depending on how the deliverer behaves at the border. So the first argument for that would be the taxation of the broker's fee could then easily be avoided by having the customer pay the importation VAT. The second aspect would be the agent himself could not always foresee, if he or she helped to negotiate a contract between two parties, who is going to pay the VAT on the border. So it's also in the interest of legal certainty. And the third idea just came to my mind after I read this slide out to you, because if the place could be considered by a third country in their country, then they could come to the idea that the agent had to pay VAT on his or her services there too. And so the rule also helps to avoid a potential double taxation between EU countries and third countries. Additional reasons, as I prudently already mentioned on that slide as a last entry, might come into play, and we have just mentioned one of them, potential double taxation in relation to third countries. Now, one thing should be clear. We have just said up to now, when the underlying contract is free of tax, there might be cases where we feel the need that then also the agent's fee should be free of tax. The other way is sometimes also true. In cases where the agent's fee would be subjected to VAT, in cases where the entrepreneur pays this fee, there it should also lead to a tax where the customer pays that fee. That explains the exemption from the exemptions if an agency or a broker works for someone who wants to buy a travel service. Because in that case, either the complete amount of the sale or at least the profit margin of the enterprise which sells the travel is always subjected to VAT. There is no yeah, or mostly at least subjected to VAT. Um, so if an enterprise sells travels and they could offer a travel for 2,000, making a profit margin of 400, and the transaction is liable to tax. Depending on the tax regime which applies, it would be either the 2,000 which are taxed as gross revenue, or the 400. Now, if the enterprise decides to involve an agent or broker, we have that travel agency here. They charge now something for their services, 200 plus VAT. And now imagine that the enterprise selling the travel now has to increase their price in order to cover all their costs, also the cost of the agency. Now they probably get, they get input tax refund for the broker's fee. So they have 200 additional cost. However, in order to cover 200 additional net amount of costs, they have to increase their sales price by 238, by 200 plus VAT, because naturally to recover 200 net cost, you have to charge to your customer 200 plus VAT. So in that case, the price would go up by 238, 2,238, and the profit margin would have to go up to 638. Profit margin here to be understood as the difference between the revenue of the enterprise and the cost of the travel services which are directly bought and passed on to the customer. That is something peculiar to a special regime for travel sellers. However, the final customer would have to bear VAT tax burden on the price, so including the cost of the agency. And even if the agency service would be free of tax, we still would have the same effect, as the enterprise would have to cover the cost. The net enterprise margin would have to be increased by 200 net, so the gross price by 238. So the seller of the travel would not be able to pass on or to sell to the customer without that the cost of the agency would be covered with tax. And naturally, this explains why, if the agency is working for the traveler, the same effect must be there. So if we have the enterprise selling a travel, we have the customer here wanting to travel. The enterprise charges 2,000, includes a VAT amount, either on the total sales price or on the profit margin, depending on the special regimes for travels, whatever applies in that case. The travel agency now worked for the customer, so charges money to the customer. 200 net is wanted. And if we now say this is tax-free, then the total cost for the customer would only be 2,200 instead of 2,238, which would occur in the other constellation. What we basically would achieve would only be a strong incentive for all travel agencies to say, we only officially and formally work for the customers and charge them for fees, and that would simply be a distortion of the market. So that can't be, and that's why it is not. For that reason, you have then in the law this final remark that the tax exemption for agents of brokering service does not apply for travel agencies working for the traveler. However, it might be that you have now a special case where the service of the traveling enterprise are not taxable due to their place of service being in a third country. Um, Now, what is going to happen there? Because the cost of the travel agency are not tax-free. However, if you look closer to the case, to the testing scheme, then you would find out in this particular constellation, um, the principle of equal treatment is still followed, because then if the place of the service of the travel provider is in a third country, then the place of the service of an intermediary rendered to a private customer is where the underlying contract has its place of delivery or place of service. So then the place of the service of the travel agency's service would be in the third country, so it would be completely exempt. No, not exempt, not taxable in all EU countries. So it would also then be free of tax, as in the case where the travel enterprise had ordered or given the order to the agency. So again, our principle is kept. Well, that's has been some rather specific field of law. However, it illustrates that all these rules are not written without any economic background. You can see sometimes when you understood a simple idea here, the neutrality between the case where the entrepreneur gives the order to the agent or the customer, that you then can immediately and easily reconstruct the logic which is behind the rules. And this is the basic message which you should keep in mind, that if you closely inspect the rules and play around a bit with them, for example, imagine different situations, what would happen if, and what would happen if the rules were otherwise, then you very often find out why the rules are as they are. Okay, that was enough for today. Thank you for watching, and hope to see you soon, back soon on this channel. Thanks and goodbye.